Hello, everybody. Happy Saturday. We made it. Another good week in the books. And I'm going to recap all the stuff that you may have missed this week. So let's jump in. First of all, it is Saturday. Global market cap for crypto is just shy of 1.3 trillion. Bitcoin just broke above 34,200. I'm watching as we speak. Bitcoin dominance 52.25%. Ethereum 1790. Just shy of 1785, 1790, etc. ETH dominance 17.1%. Volume is down to 30.1 billion. It was like at 80 billion a few days ago. It's insane. But it's the weekend. We have to wait for Sunday afternoon for things really to pump. That's when Asia opens, followed by India, etc., etc. And shout out to everybody all over the world. Thank you for joining. And the fear and greed is 65. We'll talk a bit about greed and why greed is okay, but you know what's better than greed? Is extreme fear, and I'll talk about that too. So let's go. And of course, everything I say is just edutainment, never financial advice. Don't forget, you will never find content like this anywhere on the internet, but it's very important for your financial future. And the story, well, we mentioned the story. Let's jump in. I will be spending a little bit of time today on a new price prediction for Solana, as we've talked about as well for a long time. It could be the new consensus token out there. And there's so much coming out. And there's so much money flowing in. It's all goodness. So, Mr. Mike, good to see you, buddy. But let's talk about the last week div Bitcoin. This is everything priced in Bitcoin because as fiat melts away, it's important to do that. We always start with this. So you can see everything except for things like Link, Injective, Rune, Aptos, Dark Green, Solana, Cardano, Matic all beat Bitcoin. But Ethereum is still lagging. XRP and Binance had a very bad week, so did Litecoin, etc. But we don't worry too much again. The philosophy here is less is more. Focus. Let's look at the dollar chart. It's a lot more impressive. Look at this. Woohoo. Another 15.45% on Bitcoin. ETH coming back to life. It was over 1800 for a good part of the week, up 12.6 or 11.7% for the week. Solana up another 18% after adding 33% last week. Cardano on the move too. Link bumper week. Matic, Avalanche. Again, a really good week for crypto. But what we're seeing is the divergence between kind of equity markets and crypto. Crypto is red hot right now. Literally, this whole bull market is happening way earlier than expected, which is a very good omen for the future. It's going to be bonkers. 2024 is going to be insane. I can almost guarantee you that right now, barring any World War III, of course, which is always the black swan that could happen. Now, crypto is still greedy, but it has taken a little bit of a dip. We did hit 73 a few days ago, and now it's down to 66, I think. 65, sorry. And here we are. So that's it. But when we look at the equity fear and greed, this is the one I want to talk about for a second. Again, it's very important to play both sides if you want to guarantee how things go. But here we can see the stocks are now in extreme fear zone. And why do we care? Well, that is generally considered a good time to buy because this is when investors are extremely fearful and they sell their bags at the lowest possible price, far below their intrinsic value. And this means that there's an opportunity for buyers to purchase stocks at a good discount. And I do believe we will have a good rally into the year end. So the next 8 weeks are going to be very good, I do believe. But we're coming from a low base, so that's obvious. Let's look at the stock market last week. Again, a lot of red, but a few little bright spots. Microsoft up 1%, Amazon up 2%, Tesla down 2%, Google down 10%. I have now, this year so far, sold 70% of my long-standing Google bag, 10% layer at a time, and move it into crypto. Apple down 2.7%, Meta down 3.86%, etc. The energy stocks were mixed, and there was some other good names as well that got absolutely trashed this week. We'll talk about those too. Now, another piece of good news, Bitcoin shorts are down. This is the short index on my trading view. Fell 36% today. You know what that means? Well, that's a bullish signal. When that thing spikes, it's a bearish signal. It means people are placing their bets. Now people are unwinding their shorts on Bitcoin because they know the price is going to go up. And now there's a lot of talk about 40,000, 42,000 before Christmas, and even more. I covered that yesterday or last night. A huge bullish bet. Somebody bought literally $500 million worth of $40,000 strike contracts for Christmas. So KN in Hawaii, good to see you. So let's talk about a little bit of history too, because it's amazing how, first of all, how quickly time goes, but how similar sometimes things are, but also how different they are too. So let's look at some data here. And this is from TradingView and CoinGecko. But if you look at 24th of July, 2021 versus today, okay, Bitcoin price, 34,000. And the percentage gain 12 weeks after Bitcoin hit 34,000 was 80%. Can you imagine if history repeats? Wow. Bitcoin dominance, July 2021 was 47%. Now it's 54%. Okay. The crypto market cap, 1.229 billion. It's uncanny. It's exactly the same today, a tiny fraction higher. ETH was at 2,200. Now it's lower, 1,787. And ETH outperformed Bitcoin the following 12 weeks. Okay, up 86% versus Bitcoin only going up 80%. S&P 500 was higher than it is now. It's now 4,117. 2.5 years ago, it was 4,400, and the US 10-year yield is 1.23%. But to put things in perspective of how things are the same and different, orange is the same, and green is lower, and red is higher. So you can see Bitcoin price is the same. We have the crypto market cap pretty much the same, and we have the S&P 500 not the same. That's different. It's actually lower. But the key thing is the 10-year yield is 400% higher. And Bitcoin dominance is 15% higher. And the ETH price is 19% lower. Because things are changing in the crypto world. ETH, the king, the long-standing 800-pound gorilla, is being chipped away against. And we're going to cover a lot of that data today as well. So first of all, let's look at the Artemis L1, L2 dashboard. And shout out to the Artemis team as well. It's a quick kind of recap of how things are all on one page. We've got to get our own ready real soon. And we have many dashboards, but not all on one page like this. But it's a great way to scan exactly what's going on. So TVL gainers are Sol and Near so far. Also Near fees, or for fees, sorry. Winner is for the month. Solana's up 77%. Active devs, Arbitrum is up 27%. Daily active users, Bitcoin wins up 26%, and daily transactions, Bitcoin wins up 67%. Bitcoin is on fire. It's rare you see it making those huge moves around daily transactions and daily active users. Obviously, the more users you can have more daily transactions. It's logical. But to see those types of spikes in Bitcoin activity is very positive for the chain. And this is all related to what's going on. The ETF is coming. We're just not sure exactly when, but many think before year end. Now, another story that's actually having the whole internet on fire, and I used to share this sheet all the time, and it's basically the amount of stablecoin divided by the Bitcoin exchange balance and Bitcoin price. And you can see that basically over time, as the stable coins, well, put it this way, investors use stable coins as a safe harbor for their investments because they offer a way to protect their capital from losses. So when they're bearish or when they're risk averse, they are less willing to take on risks, and therefore they convert their cryptocurrency into stable coins because it's pegged to the dollar. Stable coins are less volatile and they don't go down in value, although they do melt over time. Now, the corollary is true. When people are bullish, they take their stable coins and they flip them into Bitcoin. And we're seeing that happening right now. We see huge conversion into Bitcoin. And what has the whole internet buzzing is this. Just over the past few hours, this is from Whale Alert, nearly $1 billion has moved to Binance, $1 billion worth of Tether. And why do they move all of these stable coins to Tether? It's to buy stuff. And I wonder what they're going to buy. We'll find out real soon. Those transactions will be made very fast. In addition, some other great news that came out just yesterday, the VanEck came out with some price predictions for Solana. And VanEck is a top-notch crypto analyst shop. They have digital asset funds, etc. A very good research team. And this is by far the most impressive analysis I've ever seen done in crypto, and I like to credit myself with doing a lot of that good analysis, but these guys, wow, really good. So let's walk through some of their numbers and explain a couple of things that are important, because I've been talking a lot about how Solana could become the consensus investment of this bull run. ETH was the last one. Solana, we'll see. But their price prediction models are quite impressive. They have a base case, they have a bear case, and a bull case. The base case is a value per token in 2030 of 335. If you imagine it's already 2024, which we're not too far away from, that's only 6 years away. And that's more than a 10x. We'll talk more about that. The bear case, of course, is $10. And the bull case is 3,211. But what I like about this is how they've taken into account many different factors and allocated probabilities and percentages and numbers to the actual returns. And it's actually a very logical model. It takes a lot to dig into. So if somebody wants me to do a deep dive on it, I can, but I will highlight some of the key things of this. Now, first of all, I hear people complaining, oh, well, they're saying 335 is the base. That's the floor. But the bear is 10. And then the bull is 3211. Why such a big range? Well, we don't know what's going to happen in the year 2030. We don't even know if there'll be a planet here. We don't know if some type of AI is going to create a new type of blockchain, or Elon Musk on Twitter was going to build one that's going to replace the whole financial system. We don't know. So it's very difficult to do these price predictions. But it is good to put in some type of lines in the sand as to where things will go. And part of the elements that they do is, I broke it down. They look at things like the free cash flow to token holders, the terminal free cash flow, the fully diluted value, the token supply, the value per token, and most importantly is the ROI from where we are today. So base case, the ROI, if you're investing today, is 669.97%. That is a very good investment for a little over 6 years. The bear is down 78%, and the bull case is 12,175%. That's massive, okay? Massive. These types of returns are unheard of. There's 10 names that have done these types of returns in the last 20, 30 years. 10 names. So let's compare as well. I'm going to go through some other stuff and then come back to my original price predictions from last year and earlier this year, and we'll see how they compare. But one of the things that Solana always spoke about is obviously adoption and the path to a billion users in crypto. But you can see here, these are some of the top users of the gas for the actual chain. The Pith Price Oracle is infrastructure. 21% of gas is used on that. Also, Chainlink data storage, 3.6% of gas. It's important to see here the importance of oracles that power DeFi. Number 2 is Magic Eden, and then Mango Markets, DeFi. Zeta is DeFi. Mango Markets is NFT play. So the good news there is there's a nice mix of dApps running and getting adopted. Very important. Also, the top 5 up-and-coming dApps in Solana. The thing I want to stress here is not just Backpack and NFTs, but the DePIN business, Render. I made a post on Patreon earlier today about Render and how that's off to the races. I only own 5 cryptos. The 2 I added this year were Render and Injective. That's it. And for me to make room in my stable means I have to sacrifice something else. But the whole point here is, and I've been talking about DePIN for a long time, that's decentralized physical infrastructure, Render, Hivemapper, Demo, and of course gaming, Star Atlas. Again, these are up and coming things that could have huge numbers of adoption as we go forward. The key is to have, if they have one dApp that gets out to 100 million users, that's it. Then they can get to 1 billion pretty quickly across all the rest of the dApps, I believe. But what is required for this to happen? Again, this is a beautiful chart. It's all about throughput. Data throughput is the best metric to measure blockchain capacity. A lot of people sometimes refer to it as block space, but Solana's data throughput exceeds that of any other blockchain in existence and is expected to increase by a factor of 10. That's a step change in the Fire Dancer upgrade. This is what attracted me to Solana in the first place. There was no dApps, there was no users, no adoption. It was the potential for throughput and block space, and the ability to continually process transactions enables quicker feedback to the user, finality, all that good stuff. Also, as they begin to start processing transactions instantly and the turnaround in 2 seconds or less, this will give them a huge advantage over all other chains. You can see the other chains there for comparison. The amount of megabytes per second. If you add up Sui, Aptos, and other next-gen blockchains, it's only 100. When Firedancer comes, they're going to walk away from all those other chains and compare it to Ethereum, 0.08 megabytes per second. That is what you look for in a chain. Speed. 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 Anyway, let's also look at their target. What I did was calculated their base case and their bull case, just to give some perspective on a compound annual growth rate. And you see these types of numbers, you think, ooh, I want to hold this asset for 6 or 7 years. But the CAGR to go from, say, $30 token price today to get to their base case of 335, that's 41.16% return per year on your asset. That'll take it up to 335. So that's very, very impressive. If you go to their bull case, that's exactly a 99.76% CAGR. Remember, your asset will double every year. I don't know if it's by accident that their bull case is exactly 100% CAGR, but I thought that was impressive when I backed into it. And again, your $30 goes to $60, goes to $120, goes to $239. Again, there will be a bear market in there. We'll shoot a lot higher than $100, I think, next year. But the future, 3,807, that's insane. When you look at, say, your portfolio size and you take this price, that's insane. So that's not what I think. But the other thing that's very important to note, and then I'll share my price prediction from a year ago and about 6 months ago. This is the monthly active users by chain. And right now, Solana has about 19 million fee payers using the chain every month. And you look at all the other chains. Polygon is in yellow. All others is in light blue at the top. And then you have Tron, Binance, Ethereum. Again, the monster is Solana in terms of monthly active users. They just need that killer dApp, and they need more DPIN, and then they get there. Blackhole theory in effect. The best, cheapest, fastest, most secure will win. And I've never been more confident of it. Now, these are my old price prediction models, and to see how they compare to VanEck, I thought was interesting for me. So I did have a bull target of $2,148 by the year 2032. And these are from my Retire On series, how many SOL you need to require, and if you stake, how many you need to. And by the way, staking SOL is mind-blowing. I was so surprised to see how many you actually get from that. But my bull target is $2,148 by 2032. VanEck is $3,805 by 2030. They are nearly double mine and 2 years earlier. So take whatever you want. Take the low 644, which is higher than their base, out to 2032, of course, per mine. My expected is about 1289 and 2,148. So that gave me even more confidence in these models, considering what VanEck is saying. Anyway, enough of that. If anybody wants a deeper dive into their report, it is fantastic. And it's a great framework by which to value blockchains. Absolutely fantastic. So great work, VanEck. Next, let's talk about a bit of confusion out there in the market before we get into some of the stuff. Stocks. First of all, US GDP rose 4.9%. It came in above expectations of 4.7%, the highest level since when post-COVID situation opened up. And nobody can figure out how or why. What's going on? Where is this coming from? I think the all-in pod folks were asked, why did GDP grow? And they were all scratching their heads. It's like, I have no idea. Just made up government news. And as usual, it'll be revised downwards probably over time. It's all fake anyway, and who knows how they measure this stuff. But more importantly, this is the counterbalance. And a shout out to Sanjay for sharing this with me. This is from Lykion. This is Gavikal's recession indicators of where we are. And this is a bit of an eye chart, so I'm going to break it down with some simple little arrows. Now, red means we are redlining on two indicators. That is the yield curve and the Wixelian spread. Extremely bad. Basically overdue for a recession because the average range of lags between when the hiking happens and the recession kicks in is 11 to 22 months. We're at 17 months for the yield curve, and we're at 12 months for the Wixelian spread, which is 3 to 15. So we're nearly at the end there. So that means a quarter away, 3 months or so. Then when we look at the orange, we've got the True Financial Conditions Index. It's 10 to 28 months. We're at 17 months there. And the new home affordability is brutal. 14 to 34 months, big lag there. We are at 20 months. These things are things that basically give you confidence a recession is coming, unless, of course, this time is radically different or they're completely cooking the data in the books. Who knows? And the TMS3 money supply, 13 months, so that's kind of yellow. Not too concerned about that. But 4 of those 5 are either orange or bright red, which is concerning. Again, we'll see how this pans out. But I think when you look at what's going on in the traditional market, let's look at some stocks now. Earnings are lackluster. There's warnings coming from Elon Musk and the CEO of Google, etc., etc. US government says GDP is fine. It's growing and unemployment is low. But boy, earnings reactions and earnings are lackluster, very much so, out there in the marketplace. So things are not fine by no stretch of the imagination. Let's talk about the first stock, Enphase. I bought a little position. It's now underwater. So, you can't win them all, as they say. But Enphase took a big hit on revenue. This is their financial performance. Where there's an X is where the miss happened. Q3 quarterly revenue tanked. And the team didn't warn the markets. The other competitors did warn, but not Enphase. Then the quarterly operating expenses went up. Obviously, when revenue goes down, you have a lot of fixed costs. Expenses go up. That's kind of understandable. And quarterly operating income percentage by year is also down, which of course is tied to revenue. Now, apparently there's a lot of supply in the system. There's a lot of delay in making payments because interest rates are so high. It's difficult to borrow money. The banks have closed. Liquidity is gone. This is why things are bad. But there is one bright spot, and that is the quarterly gross margin percentage by year, 48.4%. That is massive. Now, they took a big hit on revenue. I do believe everybody will want to get solar. They're the leading player, leading provider, best technology. They just can't afford it right now because despite the GDP numbers, people are closing their wallets. They don't have the cash, nor can they fund these types of expenses. Because if you want to get solar and a storage device for your house, you're talking $25,000 to $30,000. And that's the reality. It will pay itself back in 8 to 10 years, depending on where you are. Or if you're in San Francisco, probably a few months. But anyway, not going to talk more about PG&E. Let's move forward. Let's talk a little bit about mainstream media and some of the plans. This ties into crypto and the world, but it's just surprising, like Washington Post, the type of stuff that they come out with and how they bash Elon. And they talk about Musk is tilting right and he's sinking because we're a far left rag. And I'm not left or right, but I like truth and I like openness and honesty. And the way they paint this picture is like this guy is completely off the rails. Anyway, meanwhile, at X, the reason this matters for crypto, they are, the real reality is X is cash flow positive. It has more features. It's built more features in the last 12 months than the previous decade. They are coming after YouTube. They're coming after LinkedIn. They're coming after what's used to be called PR Newswires, now called Cision. And they want to build a global bank. They are positioned for growth. And what it's going to look like, we're not sure exactly. But that new X Finance, whatever, it will be blockchain enabled. And it'll empower the world to use the combination of social and payments. And this is what could interrupt everything, including things like Solana. So you got to keep an eye on where things are going. This will be interesting. And remember, Elon Musk has been thinking about this for 21 years. It's not a new idea over the last 12 months. It was always the vision of X to pull off a global payment platform, global financial services platform, a global place where you can buy and sell assets, whether they be stocks or real estate or tokenize anything or change currencies or do remittances. It's going to be big. So excited to watch. Now let's go back to Amazon for a second. Amazon grew in all major segments, but the stock still got kind of clobbered. You can see here North American revenue up 11%, international up 16%, AWS up 12%, but it wasn't good enough for the markets. Again, I don't know what the markets expect. Extreme fear. Everybody's just selling everything right now. Meta bumping up against 4 billion monthly active users. That's half of the population are using Meta products, whether it be WhatsApp or Facebook or Instagram or anything else. That cannot be ignored. That type of reach. That is stunning. And they're making a ton of money too. Record profits. So their whole mission, I think they laid off over 25% of staff, and their cost cutting really worked. The net income is up 164% to 11.6 billion, surpassing the Q4 2021 high. They're just turning stuff on. If they just turned off that Reality Labs, that would probably be $15 billion in quarterly profit, which is insane. Google, real quick, you can see their Google Cloud. That was the thing that dinged Google, is the growth rates are slowing. They're still growing. So the yellow bars are the growth in revenue, and the red is the growth rate. And you can see year over year is now 21.4%. And of course, the market didn't like that. Still growing, but it shows you this is not a reflection of Google. This is a reflection of the economy. And Google depends on the economy for people to buy stuff from them, including Google Cloud Services. So again, it's not Google, but they are primed for good growth in the future. Now, two pieces of interesting but bad macro news. First of all, real incomes fall over the summer. And these are warning signs of some underlying kind of eye-popping numbers. Americans have saved less, and their incomes adjusted for inflation fell over the summer. People think they're earning more, but no. Real disposable income is actually falling. And that could mean the pace of spending will ease in the coming months, and business investments also stalled. Meanwhile, rising long-term interest rates are smashing people. There's wars in the Ukraine, the Middle East, and a partial government shutdown could potentially happen. This is just a world of ugly. And you can see here that all of this impacts everything. It impacts stocks, how much liquid capital people have to invest. It impacts crypto. Crypto is now being driven by institutions. No ifs, ands, or buts. It's not the retail investor pumping Bitcoin from 28K to 34K. It's institutions deploying and seeding their ETFs, which is good. But remember, real incomes are falling. So stay safe out there, everybody. And in absolutely shocking news, 13% of Americans are food insecure. The number of Americans that cannot reliably afford to eat soared last year, and it continues up. Why it matters? Well, you listen to a politician, they say, oh, the economy is amazing, it's great. But no, food insecurity spiked to a level not seen since the US was recovering from the global financial crisis. That's 2009. That's the spike there. And we're heading back up. So the share of households, again, has gone up to 3% just over a few months. They cannot afford to eat in supposedly the richest country in the world. What's wrong with that picture? Talk to your politician. Let me know, because they'll tell you everything is fine. Totally fine. Anyway, shout out to everybody on Patreon. Thank you all for helping us do what we do. Thank you all for watching. We try to cover what I call the tapestry of how everything is interrelated. Thank you to the mods in the chat too, and everybody out there. And I'll see you tomorrow for a monster Q&A where we answer all the top questions from Patreon for the week. And it's a bonkers show. And that's what I get back to work on now. Thank you all for being here. Happy weekend. See you tomorrow.